Let's break down stocks in the simplest way possible. We'll demystify the jargon and get straight to the core of what it means to own a piece of a company. Forget the complicated charts and graphs for now. A stock is just a tiny piece of ownership. Think of it like a very small slice of a very large pie in a company. It represents a claim on a portion of the company's assets and future earnings. When you buy a stock, you become a part owner, a shareholder. You're not just a spectator, you're now on the team. Think about Apple, Google, or Starbucks. These are companies you use every day, and you can actually own a piece of them. Imagine being able to say, I own a little bit of Apple. Public companies sell shares on the stock market, letting regular people like you and me invest. This opens up opportunities that were once limited to a select few. Instead of just being a customer, you can be an owner, and potentially earn money as the company grows. Your success becomes intertwined with theirs. The stock market connects companies needing money to grow with people who want to invest. It's a mutually beneficial relationship. In return for your investment, you get a claim on the company's future profits. This can come in the form of dividends or an increase in the stock's value. Every time a stock price moves, it's the world's opinion of what that piece of the company is worth. It's a constant evaluation based on news, performance, and future expectations. Anyone can participate, no PhD or secret handshake required. You don't need to be a financial wizard to get started. The barrier to entry has never been lower. With online brokers and user-friendly apps, investing is now at your fingertips. You're not just betting on a symbol, you're investing in real businesses and their futures. You're supporting innovation, job creation, and economic growth. It's about believing a company will be more valuable tomorrow than today. It's a long-term game, not a get-rich-quick scheme. Stocks are the foundation of building wealth for millions. They offer the potential for significant returns over time. Let's see how this works in practice. We'll walk through the basics of buying and selling stocks in the next chapter. Imagine your business is a pizza. You slice it into 1,000 pieces. Each slice is a share. Sell some slices to friends, and now they own part of your pizza shop. If your business grows, each slice becomes more valuable. Owners can sell their slices for a profit if demand rises. If things go badly, the value drops. The price of each slice depends on how much people want it, just like stocks. Big companies like Apple have billions of shares, but the principle is the same. Each share is a tiny piece of everything the company owns and earns. When you buy a share, you're a business partner, alongside millions of others. That's the power of stock ownership, made simple. Let's dive into some real-world examples to illustrate how this all works. We're going to look at some of the biggest and most recognizable companies out there. These are names you know, brands you use, and businesses that shape our daily lives. Apple, a tech giant, has shares that cost around $230 each. This price reflects the market's current valuation of the company and its future prospects. And the company's total worth? It's valued at over $3.5 trillion, making it one of the most valuable companies in the world. This valuation is a testament to its brand, innovation, and global reach. When you buy a share, you own a tiny fraction of that giant, a small piece of a massive global enterprise. If Apple does well, innovating and growing, your share's value can rise, potentially increasing your investment. McDonald's, a global fast food chain, has shares that cost about $265, and they pay dividends, cash rewards distributed to shareholders simply for being an owner. It's like getting a small bonus just for holding the stock. Google's parent company, Alphabet, trades at around $195 a share. Owning Alphabet stock means you have a stake in a vast portfolio of innovative ventures. Everything from the world's leading video platform, YouTube, to cutting-edge self-driving car technology through Waymo. These prices are not static. They change constantly, reflecting the dynamic nature of the market. This constant fluctuation reflects the market's collective view of each company's current performance and future potential. Stocks aren't just abstract numbers on a screen. They represent ownership in real, tangible businesses that you interact with every day. With a few clicks on your smartphone, you can transition from being a consumer of these products to becoming an owner of the companies behind them. Understanding these numbers, the stock prices, and market caps, helps you make more informed and smarter investment decisions. And that's how you begin to think like an investor, analyzing and evaluating opportunities in the market. So you've decided you want a piece of the action. You're ready to invest, but how do you actually buy a stock? It might seem daunting at first, but the process is surprisingly straightforward. You use a brokerage. Think of it as an online supermarket, but instead of groceries, you're shopping for stocks. These brokerages provide the platform to connect buyers and sellers in the stock market. First, you'll need to open an account, just like opening a bank account. Then, deposit money into your brokerage account. This is the capital you'll use to purchase your stocks. Now comes the fun part. Pick the companies you want to own a part of. Research different companies and choose the ones that align with your investment goals. Today, it's as easy as using an app right on your phone. The power to invest is literally in your hands. Simply search for a company by its name or stock ticker symbol. You'll see the current price per share, and then just tap Buy. Once the transaction is complete, your shares will sit securely in your account, and you can check their value anytime you want, tracking their performance in real time. Want to sell your shares later on? Just tap Sell, and the money from the sale goes right back to your account. The stock market is now a vast, interconnected global network. Gone are the days of shouting on crowded trading floors. The best part is, you don't need a lot of money to start investing. In fact, many apps let you buy fractional shares, meaning you can invest with just a few dollars. This makes investing more accessible and inclusive than ever before. So anyone can start building wealth and securing their financial future one share at a time. Why own stocks? 2 reasons: growth and ownership. Stocks have historically grown faster than savings accounts, helping your money outpace inflation. By investing, you make your money work for you. You also get to participate in the success of the world's biggest companies. As an owner, you share in profits and innovation. There's risk: stocks can go down, even to zero. That's why you diversify, own many companies, not just one. The potential rewards have changed lives for millions. Stocks are simple pieces of real companies you can buy easily. It's not about getting rich quick, it's about building wealth over time. Start early, stay consistent, and let your money grow with the world's best businesses.